Welcome to CEO Money. I'm Michael Yorba. I have Mish Schneider, Director of Trading, Education, and Research from MarketGauge.com on the show with me today. Mish, welcome back.
Thank you, Michael. How are you?
I'm good. All right, you want to start up today with the Fed announcement?
Well, yes, it was really a statement by Powell, who you know has been under a tremendous amount of pressure politically from Trump, who has been very critical of his actions, of his intention to raise rates. And this is what we've been talking about, you know, the difficulty of Powell's position. So this morning he came back and he said the rates are basically right below neutral, which the market intimated as being somewhat dovish. And so everything took off and the dollar crashed after that. And so that statement is extremely important if he means it. And then even if he means it, will he be able to sustain it if certain things start to get out of control, which we've been talking about, namely inflationary factors, which right now have been very much under control.
Okay. All right. What about retail? How are they taking it?
Well, in the retail sector right now, and I purposely brought a laptop with me so I don't have to reach over. We had discussed that on the weekly basis, XRT was sitting at a very critical point. If you're ready to talk more about retail, you want to wait till a little bit later. I have a very special guest, but maybe we should just keep her on the sideline so we can talk a little bit more about some of the other macro picture.
Absolutely. Where do you want to go?
Yeah, okay. Well, since we're talking about the rates, which right now haven't really moved in terms of the TLT so far today has been down a little bit and back below or just sitting on the declining slope of the 50-day moving average and still very much broken down on the weekly and monthly charts. So regardless of his statement, Powell's statement, we are still looking at the fact that technically the rates still look like they are not going to be going down. And if they do, maybe they'll just neutralize and go into a trading range.
Okay, I can see that happening. You got a plateau on this before you start changing lanes, and they're really going to be concerned with the tariffs going on and moving rates at the same time. I can see that it can be a real balancing act, if you will.
Yes, and you know, we know that the market has been very susceptible to whatever the administration and the president decides to tweet. You know, so for example, 2 days ago, Apple looked like it was trying to bottom out and it closed very well. And then after hours, Trump came out and said, we're definitely going ahead with the tariffs and we're going to target Apple in particular. And after hours, it started to decline. Now it's back up and it's above that level. But still, that's the kind of influence right now and how nervous the market is, because if the market weren't that nervous, it wouldn't necessarily react so violently to whatever it perceives could change in the administration and in terms of policy.
Okay. Just an aside right now, we've got a pretty decent rally going on today, but I'm wondering if you see some resistance zones that we could have trouble at.
Well, you know, what's interesting is that the FANG stocks really kind of started this ball rolling. NVIDIA, Amazon, Apple, Google, and Netflix all really started firming up from their bottoms. And yet, as we know, what makes a rally sustainable in this market is going to be the economic modern family, particularly the Russell 2000 and the transportation sector. So last night, I did a daily report on that because I felt that the transportation sector is still the most important one to watch, and that symbol is IYT. And the reason being is because that's really where you're going to get the most tell at what's going on as far as not only are people buying goods, but are they being delivered? You know, if you're seeing the old trains, planes, and automobiles moving, that's a good sign. So from a technical standpoint, IYT had to clear 190. It did it today. Then now it's going to be getting right into major resistance between 193 and 194. So one of two scenarios can happen. And that's why even if folks listening are like, wow, gee, the market's going to rally and I'm not long, what should I do? If it's any good, you haven't missed the boat. You know, this fear of missing out is probably an irrational fear, because if IYT takes out that level and holds, I think there'll be a tremendous amount of opportunity all around. The question is going to be, where's the better opportunity? Is it going to be in equities, or is it going to be more commodity related?
That's a good question. What's your thoughts?
Well, you know, I think that you have to look at the sectors individually. So along with IYT, which of course then would be a good opportunity to look at things like airplane stocks, you know, particularly I've been watching JetBlue, which hit right against some resistance, looking at FedEx, looking at UPS, looking at things that are in the basket of IYT, if that stays firm. So what you want to do is you want to really make sure that as the money rotates into the sectors that have more relative strength, that you either buy that particular ETF or you look at the individual stocks. But it's going to be on the heels of IYT will be XRT, as we've started to talk about, and we'll get back to in a little bit. Now, would I be saying that everything is going to rally as a result? No, because I think we still have some areas that are very weak. So you got to follow the money trail. So I wouldn't necessarily load up on banks. I wouldn't necessarily load up on semiconductors, nor would I load up necessarily on biotechnology. They're being dragged up, but as soon as the rally stops, those would probably be the sectors that would be hit first.
Okay. All right. Now, did you want to talk about more about the bonds, or did you want to move on to the dollar?
Well, let's talk about the dollar, because it's so related. And, you know, we've been talking about this triage of factors and what could possibly spark inflation in 2019. And so the triage of factors are still the same. It would be the bonds, which we just talked about. Yes, Powell came out, and which was perceived as somewhat dovish, but at the same time, it didn't really move the TLTs. The dollar, however, made a new high today, I believe, in terms of a new 2018 high, and then sold off hard after Powell's statements. And we know that from the past, Trump is definitely more inclined to want to see a weaker dollar than a stronger dollar. And the reason is very simple. In terms of real estate, you know, it's much better if the dollar is a bit weaker in terms of being somebody who has a lot of real estate holdings the way Trump has. And also the dollar would be good in terms of, you know, more commerce. But then there's a point where that then slaps everybody in the face. And that is, if the Fed has to be on hold and the dollar starts falling, are we now starting to look at inflation factors perking up? And so the third one, which is not necessarily the only tell of inflation, but it was an early tell, was oil, which we know just had this major correction and now made a new low yesterday for the move down, and has popped up a little bit today. But what's so interesting, technically, once again, is that today's range so far is inside yesterday's range. If it remains like that today, then we would be looking tomorrow. If oil pops up over, let's see, 1108, which is yesterday's high and so far close to today's high, then it's very possible that that will get going again. So if we have a weak dollar, rates kind of stagnant, and the oil prices going up, then I think maybe we're starting to set that real stage now for commodities for 2019.
Yeah, I'm looking at it, and although I'm not the expert that you are, but it seems to me we've had our three gaps. The breakaway gap that occurred on oil back in the beginning of October, the continuation gap at about the third week of October, and then the exhaustion gap with an island starting to form now. So it seems to me gap theory is we've had the exhaustion gap, and the possibility of that rally outside, once it breaks out and gives us a clear indication, could be setting up. Am I connecting the dots correctly with you on this?
Perfectly. And you know, I was an oil trader in the Mercantile Exchange in New York for many years. And I was already a point and figure chartist at that particular point. And so the oil market, again, is also extremely technical. And so that exhaustion gap was something that I started to look out for a couple of days ago. And then yesterday it didn't quite close at the area I wanted to close. But like I said, now that we're getting the inside day today, a gap above that 1108 area would certainly give a good low risk opportunity to get into it. If you're wrong, you'd really just basically be putting your stop under the recent low, which I think is 1064.
Okay. All right. You wanted to talk about gold and silver also, I take it.
Well, because that gold obviously is the go-to inflationary indicator. Mm-hmm. Silver, as we've talked about also in the past, has kind of a two-purpose. It's got an industrial use as well as being somewhat of a hedge for against inflation. So right now they both took off with Powell's statements, and they're coming back down a little bit. But I would continue to watch. I mean, particularly gold had a big dump yesterday, and that was in relation to the dollar. So you really almost have to watch the dollar in order to trade the gold. That's how I would look at it. So if the dollar continues to fall here and can't get back up to those highs, and we start to see follow through on this move, and this isn't just a one-day wonder type of situation, then I think you're looking at 114.50 as kind of a good first area of wall of support in gold, and 13, the low in silver has been 1304. So that area now, I mean, again, you're really not that far away. You want to see some momentum coming into it, but you have very low risk for at least maybe some starter positions. But again, I'd watch the dollar first, because if that starts to creep up, the gold and the silver will continue to have some issues. And that can run independently, by the way, of oil.
Got it.
Because look what oil did. Oil went crazy, and the metals really didn't move.
Exactly. All right. Before we close out, the retail sector, XRT.
Well, I wanted to introduce you to a very special guest. Come here, honey. Can you see her?
Yes.
Okay, this is Granny Retail. And as you know, and I'll give her a little bit of an introduction here, her symbol is XRT. She's a very crucial member of my economic modern family. She's married, actually, to Russell 2000, although she lives in Minnesota, because that, and I'll let her tell you about that in a second. But she's extremely important to the whole picture of whether or not this rally in equities that we're experiencing off these lows can sustain. So Granny, say hi to everybody. Hello, Michael.
Hi, Granny.
Fish. So let me tell you a little bit about myself. So first of all, as I said, I'm an ETF, and my symbol's XRT, and 100% of the stocks that are in my basket are all in the United States. So I'm extremely important to the overall U.S. economy. As some of you might know, I'm 70% of the gross domestic product. So that makes me old, but also really, really important. So let me tell you a little bit about what's going on right now. Retail sales came out in October, and they went up. And now the next retail sales comes out in December 14th. So we're going to be looking for that number to be positive. And considering we just got through Black Friday, which had record sales, that's really, really going to be a big number for December and into January. Would you like to know why?
Sure.
Okay, well, basically, there's a trickle-down effect in my area. It's not just about the malls. The malls here, Granny, let's fix your hat. The malls are only one part of it. There's also a real attachment to real estate, because we have a lot of money tied up in commercial real estate. And so the REITs, which have been sort of floundering around and interest rate sensitive, will do better if we have any kind of resurrection in the mall. And we've really been trying, to get those malls back up and running again. But my sector is not necessarily so much about online shopping. My sector is really about brick and mortar. Will people, besides old ladies like me who love to do mall laps, go to the mall and shop?
Okay.
So Granny, also, why don't you tell them a little bit about where you're sitting technically right now on the charts? Oh, okay, Mish. Well, I'll tell you right now that 45 is a very important area because that's where the 200-week moving average comes in. And we got through 46 today, which is very good because now it looks like I could possibly go up to maybe around 47.50, and that's where I start running into some resistance on the weekly chart. But as Mish told you before, you want to watch IYT because I may be the actual supply, but that's going to be the demand, and we're going to kind of work hand in hand. So if IYT can get through what Mish told you before, 193, 194, and I can get through 47.50, we just may have ourselves a rally in the market.
Okay, those are great. That's Granny. Thank you for that great information.
Oh, thank you. It's been my pleasure to be here. I'm just going to hobble with my cane away.
Okay. All right, Mish, it's been a pleasure having you on the show. Thank you so much. I look forward to following through, marking these milestones that we need to pay attention to, and talking to you soon. We're going to have Keith back on the show soon, too, I hope, right?
Yes, yes, and thank you for allowing me to introduce you to one of my alter egos. As you know, I have 5 more, so we'll bring them around on the show. It's just fun. It's a really good teaching method to be looking at something visual. You know, when you think about going to the mall and you think about somebody like Granny in brick and mortar, it really actually brings home the point of what an important sector that is in the U.S. economy.
You did a great job of breaking it out, too. I really appreciate that.
Okay. All right. Thank you so much, Michael. We'll see you again.
You're welcome.
Okay. Bye.
Bye. You've been watching CEO Money with Michael Yorba. Thanks for joining with us. Like us on Facebook, follow us on Twitter, and subscribe to our YouTube channel. Goodbye, Granny.